welcome back with me. Don't forget to like, share, comment, and subscribe. London Router, the OPEC Plus group of oil producers is discussing output cuts of more than 1 million barrels per day. BPD, OPEC source said, and voluntary cuts by individual members could come on top of that, making it their largest cut since 2020. The group is set to meet on October 5 in Vienna, in person for the first time since March 2020. Again, a big drop of falling oil prices, a month of surf market volatility, which prompted top OPEC Plus producer Saudi Arabia to say the group could cut production. OPEC Plus, with combines OPEC countries and allies such as Russia, has been gradually raising its output target to unwith the record cut it made in 2020, but it now faces a sharp fall in prices, which have dipped below $90 per barrel from as high as $120 in recent months, due to fears about the global economy and a rally in the US dollar after the Federal Reserve raised rates. It may be as significant as the April 2020 meeting, the source said, referring to when OPEC Plus agreed record supply cuts of around 10 million BPD, or 10% of global supply, as the COVID-19 pandemic stalls ahead. The main a significant cut is likely to injure the United States, which has been putting pressure on Saudi Arabia to continue pumping more to help oil prices soften further and reduce revenue for Russia as the West seeks to punish Moscow for sending troops into Ukraine. What the West describes as an invasion, the Kremlin called a specially military operation. Saudi Arabia has not commended Moscow action amid difficult relations with the administration of U.S. President Joe Biden. Last week, a source familiar with Russian thinking said Moscow would like to see OPEC Plus cut its output target by 1 million barrels per day, BPD, or 1% of global supply. On Sunday, sources said the cut may exceed 1 million BPD. On Monday, one OPEC source said voluntary cuts by individual members would come on top of that figures. It was not yet clear what level of voluntary cuts Saudi Arabia or any other top Gulf OPEC producers could contribute. In the past few years, only Saudi Arabia has offered voluntary cuts to give additional boost to the market. My instinct is that if the OPEC Plus have suggested a cut and prices are still going down, they will have to do it and a bigger one than they wanted, said Rad Al-Qadiri, managing director at Erosia Group. Stephen Bernard at PVM said fear or a demand-shaping recession have settled OPEC Plus, and then they are set to take prompt action. It must be noted that OPEC Plus is already pumping more than 3 million BPD below its target, hence any future cuts will only exacerbate the existing supply tightness, he said. Credit Suisse stock slumped at the open Israel on Monday, and the cost of insuring its debt again default imploded after recently from the bank's senior management over the weekend failed to converse about its stability. By 0350 ET or 750 GMT, Credit Suisse stock was down 9.4% at the new all-time low, while Trader said its 5-year credit default swap. It tracked the cost of insuring its again default over the next 5 years had risen to an all-time high of around 3,050 basis points, according to some quotes. credit says is struggling to overcome a number of heavy blows to its business over recent years. In addition to heavy loss on its exposure to failed finance firm Access Capital Management and Greensill Capital, there have been a number of reputational setbacks, notably in the form of spectacular bust-up between then CEO Jan Siam and his Star Wealth Management head Iqbal Khan. Them leave the bank in disgrace. Will Khan subsequently defend to cross-train rival. Okay, maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.